start is as flat can get. 3 points higher, 1 point higher on the Nifty, 1 to 2 points higher. So it's just where it was yesterday.
I think there is a slowdown. That's the reality.
The Supreme Court has set aside the relieving of CBI Director Alok Verma from active duty, and it has reinstated him as head of the CBI.
Today, the court basically coming down hard and saying that due process must be followed and that the independence and autonomy of investigative agencies must be protected.
We are at about 10,764, so it's an absolutely flat kind of a day.
In cases of corruption, the power of superintendence over CBI is to be exercised by the CVC.
The flows into equity, that's equity plus ELSS equity, have come down by nearly 24% on a month-on-month basis.
20 points, practically where the market was before it started to pick up at right around 230 is where the Nifty would leave at. PSU banks, I mean, pharma, private banks like ICICI, yes. A couple of smaller private banks, older private sector banks, Karnataka, Federal, I mean, those kind of names, CUB, I mean, those names did well.
Markets rise for the third straight day, even as major indices end with minor gains. Nifty holds on to 10,800. The Sensex recovers more than 200 points from the day's low as it nears 36,000.
Bandhan Bank and Grove Finance, a tumble after Bandhan Bank announces the acquisition of Grove Finance through a share swap deal. Meanwhile, HDFC will be applying to the RBI to hold 15% in the merged company.
Bond yields fall on profit-taking, pulling up bank stocks. Nifty PSU Bank outperforms benchmark indices led by SBI, Indian Bank and Union Bank. Among private sector banks, ICICI tops the chart, ending at a 52-week high.
Nifty Pharma gains 1.5%, courtesy of 4% rally in Sun Pharma. Positive commentary on pricing from Teva, and of course on earnings helps the sector do well. Of course, primarily led by stocks like Sun, Aurobindo, and Lupin.
The mutual fund industry sees weak inflows for the month of December into equities and bonds, with over a 21% drop in inflows into equity schemes at 6,600 crores. It's half the amount of inflows the industry saw in October, and a far cry from the big numbers that were seen 2 years ago. Well, those were the top 5 headlines from Dalal Street on a day when the indices did very little, choppy within a range. Hello and welcome to Markets Today Talk Back, the show where we tell you about all that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. By close, not very much happened, although there was promise for maybe 15 minutes or so right after we began closing bell. I mean, right after 2:30 to 2:45, the market took off. It looked like things would be different. I mean, it was different. The market was down and out, and it was not by close, but in a way, advantage lost. 30 points on the Nifty. We will discuss all of that. We will talk about what really drove markets, sectors which moved. We'll take your questions as well. Joining us now to answer your questions, we have Sanjeev Bhasin from IIFL and technical expert Mitesh Thakkar. Gentlemen, thanks very much for being with us here on the show. Before we start our Q&A session, take a quick look at what really happened, rewind the clock right at the beginning and take stock. Lata.
Well, I wish I could be useful. It was a day when global cues were somewhat mixed. I mean, in Asia, China did badly, Kospi did badly, but Japan did well, Hong Kong did well. Hong Kong and Shanghai themselves were not going in the same direction. Again, European stocks did not do all that badly. So it was mixed cues that we got for a bit. Crude prices were lower, for a bit they were higher, moving between $57 and $58. So really confusing cues and therefore mixed performances. The Nifty moved in a narrow range, as we said, with ending up with minor gains, quarter percentage point in terms of gains. But what's important is it's the third straight day of gains. So clearly the bulls are not giving up, but one can understand the uncertainty. There is a Trump speech tomorrow, and knowing the president's temper, it could really go either way, especially because it is on government shutdown and it is on the Mexican wall with between Mexico and the United States as well. earnings season kicks in tomorrow with IndusInd Bank and thereafter TCS and Infosys. So a little bit of nervousness to break the upper bound can be understood. Yet it is important that the lower bound also was not broken. In spite of that mutual fund news, which you're going to analyze later on today, in spite of that poor flows news, the market did not give up the lower bound either, helped ably by the Bank Nifty. But that was a random move. You know, there were a lot of people taking profit on their shorts in the bond market. They'd oversold the bonds on fears of this big package. And now people started buying back some of those bonds, probably expecting that, okay, when it happens, at 7.5, it's attractive levels to buy. So you saw a lot of buying of bonds, short covering, and that brought the yield from 7.5 to 7.45 and resulted in some short covering in the bank market as well, in the bank shares market. The lead rallies happened in SBI, ICICI, Axis, but the HDFC, Kotak variety of banks were not affected much. PSU banks, I think the PSU bank index was actually the best performing index. Mid caps completely underperformed. We will discuss Bandhan and Griha in detail, but you tell us what more caught your eye.
So, I mean, I think you gave us the flavor in terms of what moved, Lata. So, let's just dive straight into the indices, the stocks in the large cap space which moved. So, all banks, I mean, ICICI, State Bank of India, Axis, Yes Bank, all seeing some buoyancy by close. And of course, I mean, the PSU bank space, the PSU bank index was the top performing index across the board. Other Nifty gainers, Sun Pharma, largely responsible for that move that we saw on the pharmaceutical index. Tata Motors was okay. Bharti Infratel was the other one, which was up about 1.5%. Stocks which sold off. Z was down 3%. From 500, not very far back. It's lost 50 rupees already. UPL is down 1.5%. Lever was down 3/4. HDFC Bank were also sideways to down. There you go, 0.75% lower. Mid caps which underperformed. Group Finance was lower. Bandhan Bank, big cut on both those names. So for the second day running, Havells was down. Godrej Consumer 2.6 lower. There was Mindtree which was down about 1.6, 1.7% as well. And in terms of gainers, Union Bank, Syndicate Bank, Canada, the entire PSU Bank space was higher. There was Dhampur, Praj, Page, which had been losing for the last many trading sessions, saw about a 4-5% pop by close. Lata.
Okay. Well, that's the list of mid-caps that performed and did not perform. Let's find out what our guests have made of the markets. First up to you, Mitesh. 3 days of resistance put up by the bulls, refusing to give up. Does that make the case for a long trade?
Good evening, Lata. See, I think while, we may argue that, yes, we've kind of been slightly more steady, but also the fact that we were aided by a bounce back in the US markets yesterday, for yesterday's session. And then, I think we've not had any strength or follow through going beyond 10,850 or any signs of showing that we'll be able to capture this 10,950, 11,000 zone. So I think it looks like a market which is undecided. Maybe with the results coming in, I think, you might get some kind of a directional clue. But for the timing, I think it's a market which is contracting. 10,700, 720 on the lower side, 10,900, 950 on the upper side remains the broader boundaries. And once we get a more directional clarity, I think then maybe the index might show some kind of directional bias. But for the timing, it remains a stock specific and a narrow market.
Okay, it remains a narrow market. We move on to the second story. Bandhan Bank and Group Finance stumbled in trade after Bandhan Bank announced the acquisition of Group Finance through a share swap deal. Bandhan Bank lost 4%, while Group took a knock of almost 17%. Meanwhile, HDFC will be applying to the Reserve Bank of India to hold 15% in the merged entity. Let's listen into Deepak Parekh, Chairman of HDFC, and Chandrasekhar Ghosh, Managing Director and CEO of Bandhan Bank, on the road ahead for the merger.
I'm very optimistic on housing finance because everyone wants a home and government made it easier by giving incentives. Government has made it easier to developers build small homes and you don't pay any tax on gains, on profits. The synergies between GRU and Bandhan are much, much greater than the synergies between HDFC and GRU. We both are concentrated in Western India. We have branches close to each other. And our average loans are coming down because of the government incentives. Earlier there was a gap. Now we are competing with GRU. You cannot compete with a subsidiary of yours where you have 58%.
The stake of the NOFH is 82%. It will become to 40%. And out of that, 42% should be like to reduce and come to 40%. So in this, the transaction, it will be helped on that to reduce the 21%. Right. That means half of that dilution has come. Yes. So we have a good plan, constructive plan on that, but we need also the very good types of opportunities. We cannot be immediately like to do it on that. So we are working on that very constructively, and we are making the good strategy how quick we are like to compliance to 40%.
Okay, so the question remains, why did both stocks fall, Gruha and Bandhan Bank? First, the swap ratio itself, for 1,000 shares of Gruha Finance, you got 568 shares of Bandhan. If you did the math, divide the number of shares of Gruha by 1,000 and multiply it by 568, then you would have discovered that the valuation of Bandhan, valuation of Gruha was at an 8% discount to yesterday's closing price. So today when the markets opened, you had to adjust to that 8%. Yesterday's price, the valuation would have been 22,400 crore. But if you do the math, then the company, Bandhan, has valued it at 20,700 crore. So that difference had to be made. So 8% it was to fall. Why did Bandhan fall 15%? Maybe a part of it lies in the fact that in the past 2 months, if you pick up a 3-month chart of Bandhan, of Gruha, you will find that it has risen from 250 rupees to 306 rupees. Much of it after the stock of merger started. So some of that also had to be creamed off, and that is what you saw. Now, why would Bandhan fall so much, about 4.5%? Bandhan has a double problem. One, that after it issues Bandhan shares in place of Gruha shares, the total amount of stake held by HDFC in Bandhan goes to 15%. So that has to be brought down under RBI rules to 5%. With RBI's permission, it can go to 10%. It's extremely unlikely RBI will give that permission because HDFC already has a stake in one bank. It may not give a 10% stake in another bank. So they have to bring down their stake by 10 percentage points from 15 to 5. And separately, Bandhan's own promoters who held 82 have now become 61. As and when the merger happens, they have to bring it down further to 40. So two guys are out to sell their shares in Bandhan, HDFC and the Bandhan promoter. That will remain an overhang on Bandhan. We will have to see how things evolve from here on. HDFC is the guy who made a lot of money, and that stock ended only minorly in the red, but largely in the days to come, you're going to see them use that money to their advantage.
Absolutely. We've got a question, Lata. Arundhati Lokare has 300 shares of Gruha Finance. The cost is 294 rupees a share. I mean, the price today is what, 250. She wants to know how she should, what should she be doing really at this point in time. Well, Sanjeev, yeah. Any thoughts?
Well, I think the merger was very much skewed in favor of Bandhan. That's why you saw this sell-off. And secondly, the points which Lata made, that there will be two big houses which will be, selling their stake. I think the market was not too enthused by the merger ratio and, some of the setup. Bandhan has been an expensive bank, but we think the synergies will work out very well going into the, next 1 year or 2 years. And we think it's an ideal combination if you have a 2-year window. You'll have the best of microfinance in the retail side, and then you get the best of housing in a low ticket pace. So I think both the companies are very, very well run, pedigree management, and this price correction would be an opportunity, but with a longer time frame, because in the short run there can be volatility and over ownership will see more stock coming on the market.
Okay. Yeah, that it will. We will have to go to the third headline on that note. Thank you, Sanjeev. For the third headline today, bond yields fell as bond dealers took profit on their short positions in bonds, and with the yield falling from 7.5% to 7.45%, you saw some bit of buying coming into the banking stocks. The Nifty PSU Bank Index outperformed all the benchmark indices. It gained almost 3%. Among the Nifty itself, the gainers were SBI and banks like ICICI and Axis. Among PSU banks, Indian Bank and Union Bank also rose between 3 and 4%. And like I told you, among private sector banks, ICICI was the top gainer, ending at a 52-week high.
Rahul Kalasuya has written in with a question on ICICI Bank. He's got 200 shares of ICICI Bank, bought at 292 rupees a share. Essentially, he wants to know. He wants a 1 to 1.5 year perspective on the stock. With it closed at 380 rupees. His cost is 292. Sanjeev, again, first your thoughts, then I'll come to Mitesh. By the way, the stock made a new high today.
Well, he's in a very, very sweet spot, and I think ICICI Bank, of all the banks, all the nifty components are going to lead this rally. So I would say 500 in the next 1 year is definitely on the cards, and we are very bullish on corporate-facing banks. So ICICI is going to lead from the front, stay put, and use any decline, in fact, to add on to your position.
Okay, fair point. Mitesh, you have a view on ICICI Bank?
So Lata, I'll begin with the disclaimer. I have positions in ICICI Bank and I have a very similar kind of an outlook. The long-term charts after quite some time are now turning very positive for the stock, which means that for the next few quarters the stock should do extremely well. The targets might differ. I have a target of roughly around 450 over there, but there's no doubt that the stock will possibly be one of the best performers in the next 2 to 3 quarters.
Good to hear that. Good to hear that. Always good to hear that people are making money, especially after these banks have had such a long, lean patch. Gentlemen, do stay on. We have to take a break. But before that, we are going to give you some market opinion that we have got. And this is very important. Listen in. He's an emerging markets veteran, almost discovered that word. Mark Mobius of Mobius Capital Partners, on what he has made of the populism in India, and Nilesh Shah of Envision Capital on how he will play the markets over the next few years.
As you know, Congress Party has come out and said, look, we're going to give away to the farmers their loans. In other words, we're going to cancel all their loans. This is a lot of money for the states and for the central government. Sure. And of course, that throws the whole budget out of balance. And now we're holding our breath to find out what Modi is going to do. Because, you know, if you want to get elected, you got to give something to the farmers. Right. So if this battle and this trade-off continues, it's not going to be very good for the budget.
It looks like that the slowdown threat is for real. Okay, I think, of course, the industry and I think most players have been talking about some kind of a liquidity squeeze and the NBFCs not having funding, and therefore that's impacting demand. But I really don't think so. I clearly believe that there are banks out there who have enough liquidity to lend. I genuinely believe that the next financial year, I think, should be good from an earnings outlook point of view, especially if, say, for example, PSU banks are done with the provisioning and all of that. Corporate banks are in a better shape. If crude, etc., are subdued, I think that would mean better gross margins for corporate India and therefore better profitability. So I think on the whole, I think the outlook for next year in terms of earnings, I think looks to be reasonably strong and robust.